Hello traders and welcome to my YouTube channel. It's Forex Trader LS here, and today's YouTube video I'm going to be answering the top 5 biggest questions which I get asked as a trader, and I'm sure you'll benefit from this video too. Now if you haven't already, hit the subscribe button for more content, and without further ado we'll get started into today's video. So the first question is, how do I stop blowing accounts? Well, this is pretty straightforward to me, and it has been ever since I started using risk management. Now, how I use risk management is I risk 1% per trade every trade, and that's my trading plan and I stick to it. If I were to blow an account using 1% risk per trade, I would have to lose 100 trades in a row to blow the total 100% of my account. So if you think of it like that mathematically, then you would think it's almost possible to blow an account, which it is. Now, for you to blow an account, you might be risking 5 to 10% per trade, and that is definitely not ideal, and you should probably make a trading plan where you have a list of rules, some as to what risk you'll take and some as to the risk to reward. Now, here's another factor along the lines of risk to reward. If you have a risk to reward of 1 to 3, meaning if you risk 1%, you have the profit potential of 3%, then if you lose 2 trades and you win the 1, then you are now profitable by 1%. Now some of the trades, like I have here on the Nasdaq, if I look at this trade was a risk to reward of 1 to 4, meaning that I took 4% on this trade, risking only 1%. Now if I had lost 3 trades risking 1% before, then I would have ended my losing streak and ended up profitable by 1%. Now that isn't the case, I'm just giving you a scenario. Now some trades, like I've been in, have risk rewards of 1 to 10 and more, so a losing streak is easily wiped out by a few wins. Now I hope I've answered your question with clarity. The next question is, should I purchase a signal service? Now my view on signal services is they're not worth the value that people put on them. Now I'm going to elaborate a bit here, as that might have not been as clear to you. Now most signal services nowadays come with education as well, but I have also seen signal services where they just offer signals, not using risk management. They leave that totally up to you, and you might not know how to use risk management, meaning that you're more prone to blowing your account in a few trades that have maybe, let's say, 100 pip stop loss. Now also this leads back to risk management. If you have a 100 pip stop loss, that could be the same as having a 10 pip stop loss, as they are both equal to 1% of your account in my scenario of trading. Now going back to the question of should I pay for a signal service, you need to do your due diligence before you put your money anywhere and give money away to other people. That money is better invested in getting education on trading and how to trade. Now the next question, number 3, is what indices should I trade? Now I trade indices as well. This chart in the background is the Nasdaq, and the best indices to trade, I would say, are the Australia 200, the Nasdaq, the Japan 225, and possibly the DAX as well. Now why I chose them for is that they have the cleanest price action out of all of the indices which I trade, and therefore they are easier to trade. Now also another question, this isn't a question on here, but it's definitely a question which I also get asked a lot, is, are trading indices and Forex the same? Now to the extent of movements, you might argue and say no, but in terms of price action and chart movements, I would say yes, and this comes from my experience of trading indices here, such as the Nasdaq and many other indices, and I use the same strategy I use for Forex, and they work both ways. This even works on commodities and cryptocurrencies and all Forex pairs as well, so that is I hope that answers your question as well here. Now I would advise trading the S&P 500 as it has a low value and If you're not using risk management, you are less likely to blow your account trading the S&P 500, and it's very unlike US 30 with US 30 having wild movements and big movements that can blow your account, and I have experience in doing that. Number 4 is, what is one of the biggest tips you can give to someone trying to become profitable in trading? Now, you need to make sure you've back-tested your strategy and make sure it works at least 60% of the time, and this should be no problem if you have a good risk-to-reward ratio of at least 1 to 3 plus. Now, my risk-to-reward, I don't actually have a set risk-to-reward target that I need to have in order to place a trade, but I used to have, but now I don't anymore, because some of the trades, which I actually had a trade earlier on this week on the Nikkei 225, which had a risk to reward ratio of 1 to 9.5, that hit my take profit. So that means I can place trades which have a 1 to 1 or 1 to 1.5. I like to stay with 1 to 1.5 as my minimum, so that it's not too low like 1 to 1 or even below 1 to 1, which many traders do use trades of risk to reward below 1 to 1. Also, another tip is make sure that you're using risk management, which I've went over before, so just make a few notes on that. The next question is, how long do you spend on the chart? Now, on a typical day, maybe I would spend 1 to 3 hours on the chart, but 3 hours being the maximum amount of time which I tell myself I should be spending on the charts. You might have guessed that I do all day, but that's not the case. What I do is I set alerts on my phone. If an alert goes off, right, I'm triggered into the trade, because I also use different types of trade entries like sell limit, sell stop, buy limit, buy stop. So I get an alert when I'm triggered into the trade, so I don't need to go checking the charts because I know what's going to happen. Also, I have forecasted, so I know different scenarios that price will take. I will check them on my phone every once in a while. I usually tell myself no more than 15 minutes on the chart at any time, unless I'm back testing or looking for a trade entry. Now, I think that sort of sums up the video. I'll do one more question as a bonus, so this will be the 6th question, and it is, should I stick to trading Forex only? Now, you might know me that I mentioned that I trade cryptos, Forex, commodities, and indices, but if I were you, I would first stick to trading Forex only, and then you can go and divert trading indices, cryptos, and whatever you like. Once you have a proven strategy, you can also backtest the other instruments which I just mentioned, commodities, cryptos, and indices. And then if your strategy works on them, feel free to go ahead and start trading them. Now, I hope my answers to these questions have been effective to you, and I hope you've learned something in this video. If you want more content like this, hit the subscribe button, and I'll see you back for another video. Thanks for watching. Peace out.